Let's invite Manishi Raychaudhuri, CEO at Emmer Capital Partners, joining us on the show. Manishi, thank you very much for joining in. The situation is changing every day, but as we speak, it's about a 50% tariff, which India is slapped with. But there is hope. 15th August speech from Prime Minister Modi. Let's see what happens in Alaska. I mean, what's your sense about the Indian markets, its current positioning right now with investors?
You talked about, first of all, I wish, my best wishes to your viewers and to yourselves for a very happy Independence Day. And, it's a delight to be here. So first of all, you mentioned the tariffs, but I think investors, and particularly the foreign investors, are more concerned about the earnings environment. As I've been saying, that consensus earnings estimates for India have been on a downtrend for almost a year now, since last September, and it's been across almost all sectors. So I think this earnings estimate downtrend has to stop. Earnings estimates have to bottom out and then begin moving. It's difficult to figure out.
Okay, all right. I think we'll try to get Manishi back with us in just a bit. We're just having a bit of a technical snag out there, so we'll get Manishi back with us. Manishi, yes, I believe you're back. Go ahead and make your point.
Right, great, excellent. So, I think the impact of more cash in the hands of urban taxpayers and more money for the government workers, that should perhaps have an impact on on earnings, maybe in the later part of 2025, maybe in the fourth quarter and beyond. But investors would clearly like to see that happen before committing more capital. So, in a sense, India suffers from a relatively pedestrian micro, but at the same time, a great deal of macro stability with low current account and fiscal deficit, and now very low CPI inflation as well.
Manishi, you want to tell us how your Indian portfolio is positioned right now? What would your top bets be? And have you made any changes to your portfolio in the last 3 months?
Absolutely. So in India, so currently in the Asia ex-Japan context, we are currently neutral on India. And within India, there are possibly 3 pockets where we have a strong presence. First, the private sector banks. I've been harping on this theme for quite some time, that these are the banks that are likely to gain market share. Their asset quality is a lot better. Their technological capabilities are a lot better. Second, industrials, and that includes defense, though one has to be a bit selective here as a consequence of the high valuations that are prevailing. And third, consumer discretionaries, which is a combination of the automobiles, particularly four-wheelers, and other areas of discretionary consumption, which would also include healthcare services like, the diagnostics and the hospital chains. So these are the major areas, and 2 sectors that we are avoiding right now are consumer staples, where we think that single-digit growth going forward does not really justify the kind of valuations that they're trading at. And second, IT services, which we have completely taken out of our portfolio just about, I think 3 weeks ago. I think this, the reduction in manpower announcement by TCS is kind of a canary in the coal mine, which basically tells us about the kind of pressures from AI and, the lack of demand from the Western Hemisphere that this sector is likely to face.
Muthoot is locked up, guys, right?
Yeah.
2760 is where, that stock is at. What a move. I mean, that's the thing, right? I mean, stocks can frustrate you for a long time. And I remember this phase, stock did nothing for almost about 2 years, 2021 all the way to about 2024. Actually 2 years, 1400, 1500, 1400, 1500. And very quickly it's doubled. Similar thing with what the name, Nigel, you were mentioning, HBL Power.
Yeah.
6 months, 8 months, nothing, right? I mean, it's made a lot of money for investors from the lows, different sectors. But last 1 week, it's kind of more than made up for the underperformance. 25% very quickly, back at all-time highs. So, it's you got to be willing to sort of sit through phases of underperformance for stocks to work out. Anthem is another one. I don't know if you guys mentioned it. Anthem is up 7%. It's a recent listing from the CDMO space, but 805. Again, one of those names which has done phenomenally well. Anthem Biosciences. Pfizer is coming up with a 7% pop. It's got volumes on it as well. So 5,500 rupees in Pfizer, but it's got super gains. Premier Explosives went away home yesterday, limit up. It's got another 6.5% right now. So that's super, super strong. On the back of Muthoot, Manappuram is up 3.5% as well. So 265 on Manappuram. Bajaj Housing Finance. I think, Nigel, you were talking about this yesterday with a guest, right? 4% higher on Bajaj Housing, 113 on that one. And it's coming up with strong volumes as well. And out of the blue, there is Prime Focus, which is shooting up 8%. Prime Focus, $160. And the only reason I'm mentioning it is because it's got strong volumes behind it. So, 1,500 stocks are higher and about 900 stocks are lower. At this point in time. Vari for the second day running is a top volume-led loser on the NSE. Vari is down about 3%, so keep an eye out on that one. And you've got a couple of other things which did extremely well yesterday, which are coming, seeing some profit booking. JM Financial did extremely well, and I think it's down about 2% or so at this stage. Manishi, any thoughts on this entire CDMO or CRDMO, is whatever you want to call it? Contract research development in the pharmaceutical space. Any stocks you like and valuations, risks to the business because of what's happening in the US? Your thoughts?
Right. Now, see, honestly, contract research, contract development, CDMO, these are possibly the themes of the day. And we're seeing this not just in India, but also in China. In fact, in China, it's the reverse. It's the foreign companies, the overseas pharma majors, they're trying to license the drugs developed by the Chinese majors, right? So, I think China, in a sense, has reached this second or the third stage of development. India is possibly about 7 to 10 years behind. But broadly, I would think just like most other research outsourcing trend that we have seen, and we have seen in case of the GCCs, the Global Capability Centers, this is also a trend that's likely to remain alive in the Indian healthcare sector for the foreseeable time horizon. So it is something that the investor would have to keep a focus on, apart from the usual generics that he plays in the Indian pharmaceutical sector. In fact, I would think that contract research, contract development would possibly be less at risk from the tariff and the trade dispute scenario than the generics would be.
Okay, all right. Thanks very much for joining us. Manishi, appreciate your time and happy Independence Day, as you sort of began by telling us. Good speaking with you here on CNBC TV18.